Hey, how's everybody doing? I hope everybody is well. Thank you for tuning in. Today we're going to talk about the SPY. Before we get into that, I want to apologize if there's any real background noise. This was like the most quietest place I could find with all the kids running around. It's the weekend. Um, Other than that, please take the time to check us out on Discord at discord.io/invest underscore W underscore PARA. That is the address to the Paragon Investments chat room. There you will find some quality traders, including myself, some great education that is updated daily. You'll find some tools in there that you can use to help you out with your trades. And the community that's there is ever growing, and it's surrounded with a good set of people in there, man. Good mindset. Um, Also within that chat room, there's a self-investment set of channels where it's a step away from trading and just about investing in yourself. So please come through and check that out. Again, the Discord is Paragon Investments, and the address to that is discord.io/invest underscore W underscore PARA. Address is right here on the screen for anybody who didn't get that clear. But with that said, let's jump into this SPY talk. So a lot of people have been discussing the SPY, saying we are in a big head and shoulders pattern. And originally, that was my thought, that we were in the head and shoulders pattern until say about 2 weeks ago, where I kind of just had another way of looking at it, and I figured that we were in inverse cup and handle. Um, Inverse being that it's flipped over, for those that are new to trading that don't understand that. And let's dive into these bars. This is the monthly, so we'll break down on the time frames or time scale to see what these actual bars entail. So instead of going to the weekly, I'm gonna go straight to the daily, so I kind of explain where I came up with my analysis from. So right here, I want to say was the first small cup that formed, and this small cup that formed here uh, ends up breaking out into this bigger cup. Now, when you have a cup and handle, uh, 2/3 of the cup is usually the handle break down before it breaks out. I want to say that this one right here was a failed cup and handle, but if we let's take a trend line real quick and bring it down to where I think the cup started, which is right here. Um, First off, let's say that all chart patterns roughly have a measured move out of the chart pattern. So this measured move actually failed, but as you see, this made the cup, and then this was the handle right here. And this handle broke down or broke up, being that it's inverse, before it broke out. And it failed right here because if we were to take this as a measured move, we would say that roughly around here is the would have been the bottom of that measure move, which is around 409, 410, right? So I want to take a horizontal line real quick and just put this on the 409, 410, and we'll get back to that, right? So we'll remove that from our chart. And one thing with a cup and handle is when the handle forms, it's marked by a decrease in volume, but an increase in price, or it's marked by an increase in volume and a decrease in price, if I'm not mistaken. And right here, we can see this handle is an increase in price, but we see that the volume at that time decreased. And once the volume, or once the handle broke out, there was a spike in volume to the red, to the bear side, right? So we'll take this off here again, and we'll say that this was a failed cup and handle because it hit a major support, which was 425. So it didn't break through, right? So now we had our next cup come through, and it broke into this bigger cup, larger cup, right? 2/3 of this cup is 457, 455 area right here, these two yellow lines. And when we take this in account, here I want to say that this was our breakout handle, and then this right here was our handle breakdown, right? If we even if we did it to right here, we can see that this entire time there was a decrease in volume. Decrease in volume. Volume just keeps decreasing, right? But this whole time with the decrease in volume, price is increasing, right? But if we want to just focus on this handle right here, we see that the price is decreasing. I mean, the volume is decreasing, but the price is rising. So this is what makes me feel like this is an inverse cup and handle, just because of the the rules that the cup and handle goes by are being fulfilled within the charts and the indicators, the candlesticks and the indicators, or the price and the indicators. Um, if we go further into this, let's check this out on the hourly. Let me delete this real quick so I don't have to scroll. If we go to where this started at, where the breakout started at, which is right here, this is a continuous breakdown of volume. This entire time, volume is just breaking down. In my opinion, this volume is going to keep breaking down. It's going to tighten up in here. And what we know about tightening formations is that once it gets too tight, it got to squeeze out of this, or it got to burst out of this. I want to say by March 30th, let's just take a lucky guess. March 30th, March 31st, I feel like we're going to break down and start making a descent instead of keep ascending. So if that happens, that validates my thought on the cup and handle. And April, which is historically a month of good gains, the green candlestick, I feel like that's going to possibly change this year, especially with all that's going on. So If we dive into this deeper, and this right here is what's going on as of the present. Let's break this down. Let's see. 15. Let's go down to the 5 minute. Let's see what it's looking like. All right. Let's see what the 10 minute look like. Even off of the 10 minute, right? So I like to see things like, or look at it like this. Right here, we had an ascending triangle right here, right? If we do measured moves again, we broke out of this triangle right here. We hit this 452. So this is the broadening formation. If I could just go back a second. The first time we hit the broadening formation, coming up this handle, which is marked by these two white trend lines here. First time we hit it, so much resistance there that we gap back down. And we gap back down to a major support area at 445. Had enough strength to come back up and hit the 452 again, just barely breaking it. Then we drop right back out of it again. Because this is this trend line right here, where the broadening formation. So support isn't a straight line. Support, these support lines here that you see, or resistance lines, however you want to look at it, support is never a straight line. Support is more of a diagonal, because price either is going up diagonally or it's falling down diagonally. So if we look at this right here, and we see it broke out, had a lot of resistance right here, which sent it right back down. After it came back down, if you want to draw trend lines, I'm sure and I'm doing this on the fly, I'm sure, like I thought, from here, as I say again, support and resistance lines are never horizontals, they're always diagonals. As you see, it came back down to retest this support, right? Finally broke over this again. So this is the second time that we're breaking over it. And I probably wouldn't even be surprised if we have more trouble breaking through it, and that we ride this whole support right here up until we can break out of this. So this again would be, in my opinion, like a rising wedge or a rising triangle, ascending triangle. And at the top of this triangle, if it breaks out, let's say if it breaks out around here, we come finally hitting the 457 mark, like I've been saying. And even if we take this another way, and let's say Monday, this is our breakout. Let's say that Monday, this is our breakout. Even if this is our breakout on Monday, let's say that this is our new triangle right here, right? This is our new ascending triangle up in here. If this is our new one, if I were to clone this real quick and we get through, as you can see, the measured move gives us roughly the same thing, probably into like 458, but it gives us roughly the same thing as if we took this right here as our measured move to end up in here. So this is why I really think that this is the cup and handle, and it's coming to an end, and that this is where we'll get stopped out at, right up in this area right here. Right in here is where we'll get stopped out at. And after we hit up here, I want to say that we'll be heading back down south into bear territory, and that this historical April of being a green month is about to get changed. And it's going to be the first time that April is more red than green in a long time. So I don't think that we're going to hit this and just plummet down to the bottom, because like I said, trend lines and everything we work on a horizontal. So it's going to take time. It's going to bounce. It's going to come back to these levels of support. It's going to bounce and go down. It's going to take its time to get down there. But I want to say, come the summertime, um, we're going to be looking pretty nasty. And if we just follow this broadening the I can't even think right now, but these broadening formations, if we follow these broadening formations, um, we can't go further than that on the 10. Let's open this up and see. Well, we're getting a stop in September. Right, so I want to say like 360s is the lowest. So let's take the broadening formation until we hit 360. Some say 340. Let me move this over real quick. But if we took the broadening formation until we hit 360, we hit it somewhere around in August. Possibly. If we're following the X and Y axis on that. Things can happen way faster than that. But even here's is another look on the 4-hour chart. You can see all of this volume is just shooting down, but price is just rising. Price is just rising. So like I said, I wouldn't be surprised if we see a huge bear bar, red bar, whatever you want to call it, just take a lot of people by surprise and just start coming down. But like I said, this is not financial advice. This is just my thought process on what we got going on right here. I could be wrong, and this could be the end of it going down for a little while, and we could shoot up here and hit 480. You know, what was our top up here? 479, almost 480, I believe it was. 479.96. So we could come back up here and meet this again. But as of right now, my thought process is and stands that we meet right here in this circle right here, and we start to come back to these levels. The market is highly overbought right now. Things are higher than they have ever been. Um, so definitely think there's a time for everything to get pulled back down to earth. And with that being said, remember to come check us out on the Discord. Um, and enjoy, man. Thank you for tuning in.